Good day. Jeffrey Friedman, Senior Market Strategist, RJO Futures. The 16th of May with my stock index future comments. And I always give you the word of the day. And the word of the day is going to be weekly. Even though it's the word of the day, the word is weekly. I know that you don't know what that means. I'm going to explain it a little bit later. Let's get into the economics of the marketplace. The biggest report of the week, or today alone, was housing. Housing was pretty good. It beat the street, if you will, even though we're wrapping up earnings, and earnings has a big focus. The other two big focuses is China and Europe. Okay, now I'll explain a little bit about that. In the beginning of this week alone, we made new highs and we rallied very, very strong, made all-time new highs in the stock index futures, especially the S&P. Okay, and then came Wednesday and Thursday, we had a big downdraft or a rejection of those new highs. Okay, and we pulled back to going lower on the week. Just so you know, the week before was lower for the week. Now, let's take a look at some of the economic reports that came out in the United States alone, not looking at China, not looking at Europe, which are weak, okay? Retail sales, very disappointing. And remember, supposedly 70% of our economy in the United States is driven by retail sales. So that is kind of a disappointment. Now, remember, retail sales, a lot of the purchasing of resale sales has something to do with housing. So now today's housing report was very good, okay? Manufacture was pretty good this week. PPI was strong. That's the wholesale inflationary hedge. CPI, the retail inflationary hedge, was also a little better than people thought. If it gets too big, then that nasty word inflation would come out and the Feds would have to accelerate their tapering. But I don't think we're there yet. That's not what's driving the market, okay? We do have Michigan sentiment coming out soon, and that's the consumer retail opinion of how well the economy's doing. So those are your 3 or 4 or 5 economic things. Now let's get back to the word of the day real quick. Weekly. This could be the second week in a row that we are lower for the week. Now, if we are lower for the week and we made an all-time high, a lot of chartists, technicians, if you will, would say that's a reversal. All-time high, couldn't hold it, rejection, close lower. If we made an all-time high and we close lower than the previous week's low, which would be, by the way, around 1854 June contract S&P, that would be what is called a key reversal to the downside, or a reversal pattern going lower. Keep that in mind, because we want to see where we close today at 3:15 Central Time. Now, real quick, I'll make it real quick. If we close under 1863, which is higher than 54 or 53, last week's low, it still would be damaging on the charts and the bears would take control. Technically, in my point of view, on the way up, resistance would be around 1887. Okay, we need a close in the next 2, 3, 4 days higher than 1887 to keep the bulls nice and strong and keep the bull market alive. And of course, if we close under 63, then your next thought is last week's low, 53, 54. And then, of course, my target would be 1838 to the downside. Good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.